So with Sharon's remarks is great background, and she mentioned the outreach that the industry needs to do, and several of our presenters, Sharon included, the commissioner, and now a part of Disney's sort of keys. They've added a new key, inclusion. I think that diversity, equity, and inclusion is something that is really becoming at the core of the insurance industry. And it's not really a choice anymore. We need more people, and we need people from every background. And I'm delighted that the face of California is the face of the future. And we're pleased to be a part of trying to transform the industry as a new generation of professionals comes forward. So as I mentioned earlier, this is a knowledge-based industry. And after I got my graduate degrees, I learned about 4 minutes later that I really was just a lifetime student. There's so much to learn. And one of the things I love about iDay is I learned something from every presenter in each session, because I don't know it all. None of us can possibly, in our own lifetime experience all that there is to know about any industry, and attending events like this provides us with an education and experience that we might not otherwise be able to benefit from. As we were planning today's event, Ed Combs said, we really need something on cyber liability. This is an emerging area. It's not brand new, but it's just new enough that it's starting to mature and evolve, and the risks are evolving. And I am so delighted to present an incredible panel of women who have experience in this field. The panel will be moderated by Emy Donavan. And at first I thought Emy Donavan was just a venture capitalist, where she is a partner at Finn Venture Capital. And she evaluates programs in the insurance space. And she also was a chief underwriting officer for Resilience, where she was on the executive team and the board of product choice, positioning. She's been in cyber, technology, E&O, specialty lines in both US and international markets. I lost Emy after about the first paragraph because of how much she knows about the cyber space. I'm going to take the opportunity to introduce our other panelists before I turn it over to Emy. Jenny Soubra serves as the leader of the US cyber and tech E&O practice for Canopius. She was appointed to this position in October of 2019 after the merger between Canopius and AmTrust at Lloyd's. Based in San Francisco, Jenny brings more than 20 years of financial lines, underwriting, and management experience at some of the largest global insurers. Our other panelist is Amanda Stantzos, where she is Vice President of Cyber Underwriting and the Midwest Regional Manager for Corvus Insurance, and she joins us from Chicago. Amanda joined Corvus more than 2 years ago from Tokyo Marine HCC, where she was an Assistant Vice President of Cyber and Tech E&O Underwriting. I might also take this opportunity to point out that Amanda is a former student of mine, and I'm really proud at how much she's accomplished in such a short period of time. So Emy, if you'd lead our panel to a discussion of this emerging and important and dynamic market, that would be terrific.
Absolutely. Thank you, David. Appreciate it. And Jenny and Amanda, thank you. I'm very much looking forward to our discussion today. Just to give everyone a little bit of background in terms of cyber insurance, both on a US and more global basis, cyber insurance in the US really grew out of the tech E&O product. Back in the day, when I was started in underwriting, we had this weird little technology product, and we had a bunch of companies in Silicon Valley that needed it, and basically no one else knew what it was. And they started asking us for these first-party coverages to be added onto these products, because they realized that there was a merger of risk that wasn't just a strict liability product anymore, but really that they had their own data that was valuable to them and that could potentially impact revenue and other things, their ability to perform services, if there was some sort of inherent loss on their own systems, as opposed to in the course of providing their own services. Globally, actually, the risk grew more out of property insurance because they viewed it always as more of a first-party risk. And now we're seeing this world where these two sides are coming together, and the fullness of the product is really, I think, starting to be appreciated because it does a lot of things for a lot of people. So with that, I'd like to turn to Jenny quickly. Could you just give everyone an overview? What does this policy cover? General kind of claims you might see for those coverages?
Sure. So when we're looking at cyber risk, really, when it comes down to it, if your organization uses a computer, you need cyber, right? So what are cyber risks? So there's the third-party piece of it. It's the downstream liability that may happen in the case of some sort of a lawsuit, a class action lawsuit for a data breach. It's the legal liability to individuals for the breaches of their confidential information. Of course, there's always the regulatory actions, fines, penalties that can come as a result of that as well. But also under cyber risk, we're looking at any loss or damage to your data or information. It covers loss of revenue in the event of some sort of a cyber attack. Of course, the expenses to recover, restore any of the data that was lost, damages to your reputation, ransoms in the case that you're extorted, cyber terrorism. And so a lot of different coverages fall under a cyber policy. But when you really look at kind of the regulatory environment, as Emy mentioned, and how cyber was born, there in the US is no overarching federal law regarding privacy matters. And so what this has led to is kind of a layered regulatory environment. So we've got, general rules and regulations that vary state by state. The Federal Trade Commission gets involved as well. We've got the FTC, there's the payment card industry. You look at, healthcare related regulations like HIPAA and high tech. The Office of Consumer Rights gets involved, issues fines and penalties, as well as a variety of other laws and regulations related to financial services. And so when we look at how a cyber policy is constructed, really the various coverages fall into one of two buckets. It's either the third-party liability, which would include any of the network security and privacy liability, internet media liability is also covered, regulatory liability, and then PCI fines and penalties, which are related to the payment card industry. So those are kind of the third-party liability coverages, kind of that downstream exposure that would come into play in the case of any sort of privacy incident, whether it's a data breach, ransomware, extortion event, and all of those sorts of things. So the other part of the privacy coverage falls under the first party. And really this is what, this is where the rubber meets the road. So it would be any of the first party costs that the company itself has to incur in order to even figure out and respond to some sort of a privacy event. So we're looking at breach response. For the company to deal with and manage, the communication to the public about what happened. We're looking at cyber extortion, so paying the actual ransom to the bad actors in the case that you don't have proper backups to restore your systems. Sometimes you have no choice but to pay the criminals in order to get the decryption keys to unlock your system. Business interruption, contingent business interruption. And so those would be the costs that are incurred by the company itself to figure out what happened, first party, and then of course the downstream liability coverage parts as well in the case of some sort of lawsuit or other regulatory action.
Yeah, so you can see, Jenny, that you just perfectly demonstrated how this is an interesting policy that kind of is born from two worlds. So for the people on the phone that speak property, a lot of the second part of what you just said, I think is very probably like, oh, okay, this all makes sense. And for the liability people on the phone, especially people that have worked in specialty before, that part makes sense. You bring them together and you really get kind of a good soup to nuts policy approach to almost anything that could go wrong associated with your digital operations. So that's awesome. Now, that brings me to the idea, and Amanda, I'd love your thoughts on this. What does a submission process look like? What does a typical submission, what are you provided? What looks like it's important to you and kind of why? Because obviously this is going to be a much more complex submission than just your standard straightforward, this is the one cover you get.
Right, absolutely. So we have been looking for, can you hear me? All right, I just got some feedback. We're good. Okay. We're looking for the most comprehensive submission every single time. It doesn't always happen, but the key parts, we want to know about the operation at its whole, and then from an IT infrastructure side of things as well. We are not white hat hackers. We can't see on the inside. So we need to get some information from them to understand what policies and procedures they have in place to protect themselves. The standard stuff you're looking for: name, website, domiciled state, revenues, depending on the risk, we might ask for financials, loss runs if they've got them, and then everything about their cybersecurity controls, from basic antivirus and firewall to EDR, MDR, and all types of controls you've got in place. In the cyber market right now, it is MFA, multi-factor authentication, is the only thing people seem to care about. It seems to be a ticket for entry. Most carriers right now will not look at anything without some sort of control if they're of any size. So that's the first thing a broker or an insured may get pushback on. We may come back to you and ask, well, where are they protecting themselves? And in that, we need it in an application, and it needs to be, we have MFA in these places or not in these places, so we can assess the risk.
And Amanda, just
yeah.
really quickly, we had a question on the line, and I know as cyber people, we
Sorry,
throw
I was
around these
Yep.
MFA, EDR, and it's very normal for us. But MFA, multi-factor authentication, could you also explain EDR and MDR?
Yes. So multi-factor authentication is a two-step process to get into something. You can put this on your phone right now or your Gmail. A lot of applications, Venmo, your bank account, have these types of encryption keys that you need to get in. It's something you know, something you have. So a password, and then either a token, or they text you with a code, those types of things. We know passwords are way too easy to steal and get from people. So you want something else in addition to. It can come in the form of an app or a hardware that has a code on it that generates a number. EDR, endpoint detection and response. You think of endpoints as any hole into your system. It can be your phone, your computer, your network. If you just take a peek at your computer and look at all the ports you've got, imagine those as endpoints where somebody can get in and hack you, or do something that you don't want them to do. So endpoint detection and response is a software or a product that will monitor your environment and have a response if something looks funky or is trying to get access that shouldn't. So those are the two kind of multi-factor authentication, MFA, and then endpoint detection response, EDR, or a lot of things that we're looking for in the cyberspace. It used to be just antivirus and firewall, and maybe you've got a good backup solution. It's very much not the case anymore. So we ask all those types of questions, and same with tech E&O and cyber, same sorts of questions there.
Absolutely. Yeah. I think understanding just generally that I was actually speaking with a colleague in Spain 2 days ago, and she was one of the underwriters that I oversaw at Allianz. She's gone to the brokerage side now, and she was like, Emy, it is impossible for me to get a quote from my client, and I was like, okay, well, what are they doing? She's like, absolutely nothing. They haven't enabled anything. And I was like, Maria, I hate to tell you, we're not in the world of blind quotes anymore. And that's the case in the US, and that's the case in Spain, and that's the case everywhere in the world with cyber insurance. In part, I think, just because historically there'd been so few claims that it was easy and it was a profitable line. And now we're starting to see more activity in the space. So I think that rightly so, underwriting managers are being very, very critical of the risk that they decide to add to their portfolio. So thank you. That's super helpful. Now, Jenny, you've got the submission in the door. How does pricing work? And as these claims come in, how are you seeing more, on the reserving side of things? You've got incurred but not reported losses that attribute to your overall pricing regime. How are you thinking through that right now in the market?
Well, as you just mentioned, we're looking a lot closer at submissions these days. Looking a lot closer at controls. It can no longer be, that the client just has like a good story to tell, or that they're working on getting the controls in place. I think what we've seen just with the shift in the cyber market, even over the last 12 to 18 months, is, if the controls are not in place, then they simply cannot get coverage at any price. Which, what a time to be alive as a cyber underwriter. Because when you look back at 10 or 15 years, kind of, early on, you could not give somebody money to then buy the cyber policy. Like, people just thought that they didn't need it, right? And I think a lot of the misconception came, from the media, where it was, super large data breaches, highly publicized risk. And the average company in the small to middle market space just thought to themselves, well, I'm not big enough or important enough for anyone to care about me. And that clearly is not the case anymore. And I think just with the way that losses have developed from more of the large data breach targeting of large companies that had a lot of financial data, healthcare data, personally identifiable information, to more now of an economies of scale scattershot approach, where you just look at the endpoints, see what the vulnerabilities are, which you can do without being in the network, and just send out the ransomware to see how many machines you can impact all at once. And then asking for smaller ransoms that are affordable in the hopes that you just get a lot of the small payments and then, run off with a bag of money. There's even Yelp type sites on the dark web where you can go and look at the reviews of various types of ransomware and see, what sort of vulnerabilities, is it a 2 out of 5 star type of ransomware? Is it 5 out of 5? And actually go to ransomware universities as well on the dark web and learn how to deploy it. And so it's really become a money-making business on a much broader scale for companies of all sizes. And so, with that increased awareness, clients have realized that, at any price, if you don't have the controls in place, you will not get coverage. And so we've seen a shift, not only in terms of the way that different carriers are pricing the risk in the market, or tailoring back, terms and conditions based on controls or lack thereof of the actual insured. But we're also seeing the companies just realizing themselves and doing kind of a technology transformation to have better controls across the board. So when we're looking at pricing, like any line of business, we're going to look at some basic data points. For E&O and cyber, traditionally, it has been revenue-based. Of course, we're going to look at certain industries that, we feel may have higher exposures and kind of do some individual risk modification beyond that point. But I think one of the data points that most carriers now are putting a more heavy emphasis on is the actual record count. How many records does the insured have? What kind of information is it? Is it phone book data? Is it just like a name and email address? Is it somebody's social security number? Because the different types of data hold different values, when they are sold to from one criminal to another. And so, looking at the revenue and the record count, of course, looking at individual risk selection as well, the preference obviously being towards accounts that have strong controls. And then also attributes that, will lead to a particular carrier having a more diversified portfolio. So not really having any significant portion of your overall book in any one single bucket that might have a higher exposure. when we're looking at consideration of cat exposure in cyber, I think like what we've seen recently is that even for the small and mid-size accounts, having some sort of a ransomware or extortion event can be catastrophic to their business. If they don't have proper backups, if they haven't tested them for restorability, if something just as basic as their incident response plan and business continuity plan is stored on the network that has been compromised, if you don't have a paper copy of it, what are you going to do? Like, who are you going to call? And kind of, all of that ability to respond goes out the window. We're also looking at accounts that have, risk management resources kind of pre-vetted and in place. Some insureds are doing that on their own, but of course, all carriers offer risk management and data breach response as well. And what else can I tell you about the claims piece of it? I think when we're looking at kind of, there's been a shift obviously on the claims side as well. Historically, the data breach and the potential downstream liability associated with any class actions kind of drove how long IBNR needed to be held. And, in most cases, it's held for 2 to 3 years, just because you've responded to the data breach itself, you've restored your systems, you've spent the money on the first party costs to bring yourself back up and running, doesn't mean that 2 or 3 years down the road, when a class action is finally resolved, or, once the issues are dealt with and the regulatory fines and penalties come through, we were seeing a much longer tail on the claim side. What we're seeing now with the increase in ransomware, and it's funny because I just had a call with our claims group this morning, and we looked at all historical loss types going back to 2014. And all the way up until 2018, almost every single loss listed in that coverage type bucket was for a data breach. Data breach, loss of information, and then you go to the last 2 years and literally every single loss that was listed was a ransomware event. And so when you're looking at a ransomware type claim, the tail is much shorter, right? You're going to pay your limit if that's what it is, or it might be multiple carriers in those lower layers that ultimately pay out to resolve the ransom and spend the money on the first party costs. But then you already know what you've spent. And so the tail is much shorter. And so this is like kind of the discussion that's been taking place on the claim side is, when do we release the IBNR? Do we do it right away? Like if you've paid your limit and obviously there's no more money and you know what you've spent, does anything still need to be held? Now, even in the event of a ransomware type claim, there is still the risk of some sort of downstream liability. If data was exfiltrated out of the system, what happened to that data? Was it being used? Are you able to track kind of like what happened to that data? There's, no way to claw it back once it's out. And of course, the type of data is relevant as well. But we're kind of seeing this push and pull between, underwriting and claims, underwriting wanting to release the IBNR, improve profitability numbers, and then the claims group, because they don't have any sort of long-term actuarial data on the ransomware and extortion claims, kind of wanting to hold on to those reserves a little bit longer, just based on the type of information that they've had historically. And so, a lot of stuff is going into consideration of pricing and risk. But as Amanda said, we're looking for a lot more information when looking at accounts and submissions these days in order to decide, what industries have been hit. You look at the recent supply chain attacks and attacks on manufacturers. And so, the cyber risk, unlike, property or other kind of lines that have been around for hundreds of years, our risk is constantly evolving. We can't just look at what the frame is made of and what type of building it is and geographically where is it located to determine pricing, or even auto insurance, which, isn't as old as property, but, somebody can look at me and say, she's old and she lives in the suburbs, and the likelihood of her crashing her car like into a tree is lower than like the teenage boy. So, and so it is a little bit of a moving target, but yeah, what we've seen is a huge change in the marketplace, significant increases in pricing after 7 years of a softening cycle, changes in the claims landscape as well. And so we're always, kind of looking forward to the next thing, but
yeah.
Yep.
As a former chief underwriting officer, I'm ticked off I'm missing the hard market, just like we've been doing this for years. And I leave for venture capital right when things get really interesting. But it also makes my heart sing to hear like the basic fundamentals of underwriting are really being adhered to. When we started offering this product, we underwrote it to it very closely. But as
agree. I mean, I'm right in the middle of it.
Oh, thanks. Can you hear me now?
Yes.
Yep,
Yes.
we're good.
So yeah, I mean, now you're getting back to risk selection, limits management, and adequate pricing for, the likelihood of risk. And again, it's a moving target, but it's very interesting. We've got a ton, by the way, of really interesting questions that I do believe we will have time for, but I'd like to get through just a couple other basics. So with that, Amanda, Jenny was talking a lot about the kinds of claims we're seeing based on, and how the market's shifting and that's changing pricing. But what happens to a client? Like they've got a claim, you open up your computer, there's a big red screen that says you've been hacked. What happens when you buy an insurance policy? What do you do next?
Yeah, people have to understand that they're buying it and we are a partner. So we are there to serve them as the carrier. Every deck page should have a claims handling portion, or there should be some sort of notice that goes along with it. Usually in cyber, it's a hotline and an email address. We suggest that they contact through both channels. Depending on the risk, some things are a little, or the claim, some things are a little bit more urgent. You open your computer, big red, you can't do anything, big red thing, pay me my money. Call immediately, send an email to your carrier and possibly also your agent, because they may have a contact that can get there faster. Smaller things that you're reporting, if you sent an email to the wrong patient and you sent the wrong file, not as urgent, maybe you don't need the hotline for that. But most carriers should have both a hotline and an email address. There is a trend that these ransomware attacks love to happen over holiday weekends. Every claims team knows when the underwriters get some time off on the holiday weekend. They don't, because those lines are hot and there's always something going on. The bad actors like to, lurk in when you're not watching and you're not on Labor Day weekend or whatever. So that's what it typically happens. Hotline, call immediately. From there, you probably are getting, the phone is being answered either by a claims team or a law firm, some vendor that has partnered with the carrier, and they get to work. The questions are, what's going on? They need to know what's going on in your system, what you're seeing, so they can put the right vendors in place for you. Somebody who's really good at ransomware, maybe not as good as someone else on a HIPAA claim. So the claim examiner will get assigned. They will immediately contact the insured to figure out what's going on, what happened, and what they need to do. From there, they will contact breach counsel or any vendor that they have to put them on the incident. Probably the first thing that happens is forensics. They get into the system, figure out what's going on. Was data exfiltrated? What was accessed? Those types of things they need to figure out, because then you'll continue to go further. As Jenny said, if data was exfiltrated, you've got a much bigger incident on your hands instead. So those are the types of questions that a claims examiner will ask, and the forensics company will start to dig in and see. And if you have to pay the ransom, the vendor will do that. That is not something any of us love doing. We don't really like rewarding somebody for their bad behavior. But sometimes you just have to pay it to get back up and running. The supply chain issue, it may be a larger claim if you don't pay the ransom and don't get back up and running right away. So those are the types of things that they're going to start to evaluate. One with the carrier who's going to eventually pay that loss, and the vendors who are there to help with that. It's a true partnership. Nobody wants them to be down or have to pay a loss, but that's what they purchased insurance for. It's why any of us buy insurance for anything. So we're there to help as a carrier. And then some of the services they'll get from that, right after the claim is done, or, you know, they're still in the midst of trying to wrap it up. Some of these vendors offer their services for the future to make sure this doesn't happen again. A lot of the carriers offer these too, but when you're in the midst of a claim and you're working with a vendor, a Tetra Defense, or, you know, whoever, they will say, all right, this is what happened. This is how they got in. Now let's make sure they don't. And they'll give you a list of things to do, and they can help you get there. Whether it's putting multi-factor authentication in place, or it's, you know, getting a better backup solution so they don't access your backup files. Those things will be at the end of a claim, when all is said and done. But it is a, you know, full team effort from all angles, including a law firm, because sometimes you can get dragged into a lawsuit or privacy issue. So it's a very, we used to call it a breach team, you know, or a breach coach. And now it's really a ransomware team, but it's the same concept. You've got a whole team of people trying to figure it out.
Yep. And those ransomware teams, those breach teams, coaches, whatever, and the claims team work really closely together. And I'll tell you, having underwritten cyber since before it was called cyber, we used to throw a lot of money at figuring out how to adjust claims appropriately. And over time, we realized we were actually saving ourselves money by bringing these people in and helping with mediation and different things like that. You know, so the product has definitely evolved over the years to be much more thoughtful about how the claims actually work and how do you respond to that, right? So I'm going to turn quickly to Jenny, partially because I know this is an area of expertise for her. Regarding the vendor panel, the team of people that come together to help start responding when there's a claim in place, you know, how does the carrier think through what sort of vendors they need, how to select those vendors, and how to make sure that there's enough support if there's a huge slew of claims that come in to make sure that they're able to provide the right services for the client in their time of need?
Yeah, so there's a lot of different things that a carrier looks at, and I've been involved in just completely from the ground up. I created the vendor panel over at Allianz to deal with cyber response on a global basis. By the way. Yes, you're welcome. That was some good work we did there. But there's so many different moving parts in a cyber incident. So you need to have, at least in the US, the breach coach hotlines are all run by law firms. And the reason for that is it affords the client the attorney-client privilege for the entire process of the response. And so they call the hotline, they get an attorney on the phone, tell them what happened, and then the attorney actually goes to the approved vendor panel and procures the services on behalf of the client. And by having the attorney deal with that, again, it comes back to the attorney-client privilege, which is quite useful in the event of a class action or some sort of liability down the road. So the first thing, right, the reason that the carriers have these panels in place, number one, you cannot have your insured trying to negotiate rates in a time of crisis because they will 100% get ripped off. And so, you know, depending on how large the book is, the volume of claims, the frequency, these panels are already in place with negotiated rates. The other benefit is that the firms have been vetted by the carrier themselves. So they're going to look at what their capabilities are, what their bandwidth is, what's the geographical footprint in order for them to respond to an incident. It also allows for having a different firm available in the case that there might be some sort of a conflict in place. And so there's a lot of just different reasons for having the different vendors on the panel. Now, generally speaking, the vendors will all fall into kind of the same sorts of buckets. So you've got the breach hotline. You have different firms that would handle the litigation piece. You have the forensic firms that go in and just figure out what happened to begin with. You'll have firms that specialize in data restoration. Of course, the credit monitoring, any notification, and of course the PR to help the client deal with communication to the public. And what we've seen really, especially on the PR piece, the way that you communicate how you handled the breach and loss of any sensitive information makes all the difference in the end in terms of kind of like that downstream liability and any potential regulatory action. Just looking back, 10 or so years, when you looked at the way that Target handled their breach in the media versus the way that Home Depot handled it in the media, it made a difference of many, many millions of dollars on the back end in terms of the liability downstream. So all carriers now, I mean, it really is a table stake at this point to have the vendor panel in place for all of the different buckets. But what we're seeing in terms of vendor panels is not just on the post-breach response side. Most carriers have now partnered for pre-loss mitigation services that are available to their insureds, because guess what? If you have a better controlled risk with better controls, somebody that's more aware of what the risk is, that in turn is going to be a better risk to underwrite and put on the books. So we talked about the different buckets. So when a carrier is looking at who to select to have on their vendor panel, I think what it really comes down to is the composition of their book of business. So there's different vendors that specialize in different size of accounts. Some are more focused and geared towards providing services to small and mid-sized businesses. And some are really geared towards dealing with the very large multi-billion-dollar, Fortune 1000 types of accounts. It also comes down in terms of composition to the types of industries that the insured is writing. And so again, of course, the vendors will specialize maybe in, healthcare as an industry vertical versus manufacturing as a vertical. And so when we're looking at the book composition, it's the size of account, the industry breakdown, and then also the geographical footprint of the book of business itself. If you're only writing risks that are based in the US and have no global operations, that's going to make a difference in who you're selecting for your vendor panel. If you're writing multinational, global, large account business, you're going to need to have vendors on the panel that can respond in all of the different regions around the world. A lot of carriers as well that are writing international business will have, outside of just a vendor that might be based here in the US but has global capabilities, they'll be also looking to secure relationships and contracts with certain vendors that might only operate in a small segment of the world. Different insureds might want to have somebody that is local, that speaks their language, to respond to the incident in person. And so I think what it comes down to is you really do need to have the services in all of the different buckets. Pre-loss mitigation is becoming extremely important. And so we're seeing, the services and the vendors on both sides of the fence. And then just, looking at the book composition and where they're operating and what size of account makes a difference as well. You're on mute.
My dog was barking in the background, so I had to put my phone on mute. Help came, so this is where we're at. So we had a bunch of really good questions on the line, specifically around how are you handling ransomware payments considering OFAC? I don't want anyone to get themselves in trouble about how this is being handled. So I think maybe I'll try to respond as the non-insurance person. This is a super interesting area. And Jenny actually is drafting a bit of an article right now, a thought leadership piece that she had me do a proofread on the other day about how different regulatory bodies and oversight bodies are starting to weigh in on this sort of thing, right? So one, they're starting to try and be able to claw back Bitcoin payments. That's a huge area of regulation right now, so that they can recoup the money and they're not actually going to fund these foreign entities. There are companies that do OFAC services to try and figure out who is connected to the organization that's requesting the money, to see if they can do anything to vet whether there would need to be sanctions in place. But it's a great question, because right now there's a great deal of opacity around that. I'm sorry, OFAC, the Office of Foreign Asset Control within the Department of the Treasury, has issued an advisory, for those who don't know, basically saying, don't forget, you can be sanctioned if you pay ransoms via ransomware to a restricted body internationally, right? One of the things that they've said is there will be some level of forgiveness if you involve the FBI or another agency to kind of help you through the process. Because at the end of the day, the government isn't looking to completely shutter companies. And as we've talked about up until this point, these ransomware and other cyber claims can be catastrophic for companies who all of a sudden are out of business for a number of days, can't make payroll, all of these other things. If you can pay a ransom and have a reasonable understanding that it's not going to go to some sort of foreign actor, or if it does, there may be recoup capabilities on the part of the FBI or others, it becomes a slightly less problematic concern. But at the same time, you've got these companies who haven't been taught proper cyber hygiene and proper backups. So you really could say, well, if you take a hard line to it, you'll literally end up with companies that just go belly up. And at this point, the government hasn't said that the problem is bad enough, that's an outcome they're willing to accept for small businesses and the economy just generally. Hopefully that's a good answer to that question. There's probably a lot more that we could say about it. But that's the overall idea there. Talking on the government stance on the payment of ransoms, I think that was kind of a similar question. Amanda or Jenny, do either of you have any thoughts on that topic specifically? That won't get your company into trouble. I was just trying to make sure that you weren't having to comment on governmental regulatory risk.
Yeah, so, I think it's been close to a year now at this point. I think it was last October that OFAC came out with a guidance. Now, as we've discussed, it is not always realistic to just not pay the ransom and then go out of business. And so, part of that guidance, as Emy mentioned, was that you've got to get the FBI involved right away. And so what we've been advising our insureds to do as we're looking at incident response plans is we're asking the question, do you know who your local FBI contact is? And if you don't, you should find out who that is, get that, notification piece of it put into your incident response plan as well. Now, when we're looking at ransom payments themselves, for the most part, they're being demanded in cryptocurrency. And so there just isn't that sort of paper trail that took down the mafia, for example. It's not traceable. I mean, the FBI and other agencies have started to be able to kind of claw back some of those ransoms, but generally speaking, that happens not very often. So what they're looking to do, we're looking at the SEC. They made a recent announcement. Let's see, they've contracted with a company called Anchain.ai, and they're going to develop capabilities to perform deep analysis and tracing on smart contracts and cryptocurrency. And so with the SEC being involved, you think of the SEC and you think of, the sorts of actions that they take, it's been more heavily focused, at least historically, on D&O activities, the securities, and the decisions that, companies make around that space. But with the SEC now getting involved with the attempts, and I think the ultimate goal to regulate cryptocurrency, so not just Bitcoin, but to regulate all cryptocurrency, is that going to actually reduce the risk of ransomware going forward? Because now all of a sudden, if it's regulated, that untraceability, lack of paper trail kind of goes away. And so that's kind of the question that we're asking now, because the SEC, I mean, that is a regulatory body that has some teeth. And if they're getting involved, whether, the ultimate intent is to reduce ransomware risk around cyber or not, I think that kind of is what is ultimately going to happen as a result of them getting involved. So, of course, we don't want to pay ransoms. We don't want to make criminals richer. It actually just kind of like creates the moral hazard of like, if they know that there's insurance, they're just going to ask for whatever that amount is versus taking the more affordable approach of increasing the likelihood of payment based on the affordability of the demand itself. What we've actually seen is now hackers going into company computer systems and searching for the insurance policies. And then they find the policies, then they see like, okay, well, this company carries 10 mil or this one 50 mil. And then they basically will just set the demand at the level that they know the insurance exists. And so, you know, again, the government now finally being more involved, taking a more proactive approach in light of all the recent supply chain losses. We've got SEC involved trying to regulate cryptocurrency. And so I think ultimately the end result will be favorable for the cyber industry. And then Amanda, of course, would, you know, give us your thoughts as well.
No, that's exactly it. I agree completely. To be honest, we, like you said, we want something to happen, but not to where it's, well, don't pay them and the economy tanks because these small businesses can't survive. I think that's where the education piece and some of the leeway of teaching people what they need to do to protect themselves. Your average auto dealer down the street doesn't know. This isn't their expertise, and they need people to guide them. And whether that's through insurance and the value added, you know, services that come with it, or you know, education from their agent. It's about time that we get some regulation around it, but how far that goes is, we'll see. We'll see what will come of that.
Yeah, I think it's a very, very interesting space, but it is good to see that, you know, the government at a federal level is trying to get involved and push from one direction. You know, if you try and then regulate the crypto market, which is really what has allowed ransomware to boom and continue really relatively unfettered. I mean, when I was globally responsible for cyber at Allianz, and I would get these reports from my underwriters in like Romania about these like rich villages that had sprung up because they decided locally to, I'm not even joking, everyone driving Mercedes and things out in Romania somewhere because they've got this little cottage industry of either ransomware or potentially even they're operating the call center for the people that want to pay the ransoms, right? There's a lot of money in this value chain. And I think regulating the crypto market is a good way to start to attack it, because if you can eliminate the mysterious payment and start to actually claw those things back through more conventional means, the enormity of the problem becomes somewhat more manageable, I think. There was one other question on fines and penalties being counter to public policy goals. When we first started writing cyber insurance, at least I'm old enough to remember when we only covered defense costs. As the market was really profitable and we didn't see a huge number of fines and penalties outside of a few different industries, healthcare, retail, and a couple of others, the underwriters started to feel more comfortable offering fines and penalties coverage. I can tell you in certain jurisdictions, Italy, Japan, and a few others, it's illegal to cover any sort of fines and penalties just at a federal level, but that's not the case here in the US. So if that was anyone's question, there are certain, you know, jurisdictions where it's harder, but that's the kind of deal with fines and penalties. I'm not sure if there were any other questions, David, on the line. I know we've got 1 or 2 more minutes left.
There was a question around how large or trivial a security flaw needs to be for a hacker to get into the system. And really, it just, the smallest chink in the armor, the tiny, like, weak link will allow the hackers to get into the system. And once they're in, you know, it's just Freeville. So when we think about the Target hack, the way that they got into the system was literally through the HVAC contractor. The HVAC contractor had, you know, access to part of the network to deal with a situation in one single store, and you know, just had a weak password, hacker got in, and once in the network was able to just exfiltrate data like from all the way across the network. So one of the things that we look for also now is, you know, segmentation of the network. Once you're in, we would want and expect for a hacker or other bad actor not to be able to access everything in the entire network. So when we think about manufacturing, for example, one of the questions we ask is, how is the operational technology segmented from like the corporate IT network? Are you able to move laterally across the network from one manufacturing site or plant to another? Or is it fully segregated so that if you get into one plant, you might shut down one single plant, but it's not going to affect everything? So we think about the Molson Coors breach at the end of last year. And, the bad actors were able to go in and literally shut down every single beer manufacturing plant globally. The entire operation for the entire company all the way around the globe was shut down. And, they were able to get into the network. And from that point, we're able to compromise one of the privileged access like administrator accounts. And from that point, they shut everything down. And so, it does not have to be a huge gaping hole in your IT security controls in order to have an incident that actually can have great magnitude. Just the tiniest little hole. It's only this big. And then once they're in, because honestly, the controls aren't going to protect against everything. And so, the next level of defense is once you're in, can you just travel across? Can you access everything? Or are there like segments and, internal walls within the network that would prevent that sort of movement?
Yep, that's a great point. And also, as Amanda mentioned earlier, the multi-factor authentication makes a huge difference, because if you do have someone that has a weak password that has really good privileges to access lots of part of the organization because of their job responsibilities, you want to make sure that that person's cell phone is actually pinging and they're saying, okay, this is the code. I don't know if you have any thoughts on that. Final thoughts, Amanda, before we close.
No, that's exactly it. It's you're only as strong as your weakest link. And a lot of times it's a person. Somebody clicks on something or lets something go. And that's as simple as it is. So yeah, you got to protect, you have to, if they're in, stop them from going all of these ways. Yeah, it's very easy, unfortunately, right now.
Unfortunately, yeah.
Mhm.
There's a lot of education to be had, but that's one of the reasons that we're very grateful to the All Industry Day for having us and allowing us to kind of tell people a little bit about our area of the world and insurance. Hopefully that was useful. And with that, David, I'll turn it back over to you.
Yes, thank you so much. Really insightful. I think this is one of those situations where the more you know you don't know. And I think you guys have helped us learn how little we know, but we certainly know a lot more than we did an hour ago. Jenny, Amanda, Emy, thanks for hosting this panel and providing sort of insights into the coverages, the claims process, the submissions, et cetera. Thanks again.
No problem. Thanks, everyone.
Thank you.
Thank you.
At this time, I'll hand it over to Caron.